The Roth IRA, one of the best wealth building tools available to investors of all types and all income levels. Any investor can utilize a Roth IRA if you have earned income. Depending on your income level, there could be a few additional steps that you have to go through, but it is available through a backdoor option. In today's video, we will first discuss what a Roth IRA is, looking at both the pros and the cons. Why is it useful for building long-term wealth, and how high-income individuals can utilize this backdoor option. And lastly, we will go through step by step to see how you can open up a Roth IRA today. With that being said, let's jump into the video. Hey everyone, Mark here, back for another video. If you're new to the channel, welcome. On this channel, we discuss everything to help you become not only a better investor, but to help you meet your financial goals. But before we begin, here's a quick word from today's sponsor. Today's video is sponsored by Aura. With how much is consumed online these days, you want to take comfort knowing your data and personal information is safe and protected. Aura is a one-stop shop as they provide credit monitoring, account tracking, antivirus software, password manager, VPN, and other services. There are many services out there where you can get updated credit scores or other companies that offer antivirus software. But how many places can you find all of this together in one comprehensive place? The FBI reported a 64% increase in financial loss due to digital crime. Do not take this lightly. Cyber criminals are trying everything these days to get their hands on your data. Let Aura help protect you. Right now, Aura is running a very special promotion, and if you go to aura.com/Mark, you can try out these services risk-free for 14 days. I will leave a link down in the description below. Now let's get back to discussing today's topic, which is the Roth IRA and how it can help you on your financial journey. Let's begin with what a Roth IRA is. A Roth IRA is a type of retirement account, a type of individual retirement account. That's what IRA stands for, to be exact, which you yourself can invest with and build wealth with over the long term. It is a specific type of account. Just like you have a taxable account, you can have an IRA account, but it is not an investment. So you will still need to make investments within the account. So an easy way of thinking of it is that a Roth IRA is another type of investing account. Like I said, you have taxable accounts, you have 401ks, and you also have individual retirements, both traditional, you could have self-employed, or a Roth IRA. However, the Roth IRA is not just another account. The Roth IRA comes with major tax benefits that we will discuss on this video, and we will get into that right now. When you contribute money into a Roth IRA, that money grows tax-free, which can be a huge benefit over 10, 20, 30, 40 plus years. The money that you invest is after-tax dollars. So you first need to pay taxes on your earned income. And from that, you can contribute money into your Roth IRA. But as we have looked at in other videos, over a long time period, the S&P 500 gradually goes up. We didn't see that in 2022, but over a 20-year period, a 20 consecutive year period, the S&P 500 has never ended down over that time period. So knowing that, you are putting money in today that will grow tax-free and will be 100% yours once you decide to retire and begin taking that money out. Uncle Sam cannot come looking for you anymore. Your money within this account is yours alone. Let's say you invest in both a Roth IRA and a taxable account. You invest the exact same amount, you look at the exact same investments at the exact same time. Both accounts grow over time, and let's say we are ending now with $1 million valuation in both of these accounts. You have $1 million in your taxable account and $1 million in your Roth IRA. Now it comes time to sell those assets and take money out. Let's first look at the taxable account. So depending on how long you have held the assets, that $1 million portfolio could end up being worth only $600,000 at the end of the day due to taxes. Now when we go over to look at the Roth IRA, that $1 million portfolio that you have is still worth $1 million. Any capital gains, short-term gains, dividend income is all shielded from taxes within a Roth IRA. This is a huge advantage, especially when we are talking about dividends and short-term gains, which just means buying and selling stocks within a 12-month period, as these items are taxed at ordinary income rates up to 40%, thus having higher tax brackets. On the flip side, long-term capital gains are taxed at the 15 to 20% range. Now let's talk about contributions. As of 2022, investors can contribute up to $6,000 into their Roth IRA, $7,000 if you are over the age of 50. Beginning in 2023, those contribution limits will rise to $6,500 and $7,500 for those individuals above 50 years of age. Each individual is entitled to an individual retirement account. Whether you choose a Roth or a traditional or even both, it is up to you. But the contribution limit spans across all of these accounts combined. The other little nugget is that in order to contribute to this Roth IRA, you need to have earned income of some sort. So yes, even kids to some degree can have a Roth IRA. Now let's talk about contributions and withdrawals. You are able to withdraw your contributions. Notice that I said contributions and not earnings. Let's say that you contributed $6,000 last year and it is now worth $7,000 due to capital gains. That $1,000 gain cannot be withdrawn prior to your retirement age of 59 and a half. If for some reason you do need to take out this money in its entirety, all $7,000, to some extent, you will be forced to not only pay taxes on that money, but on top of that, you will have to incur a 10% early withdrawal penalty. Another point to make, if you decide to take some of your contributions out, there is no catch-up after this. Going back to our example last year where we contributed $6,000, and let's say you want to take out half of it. We'll take out $3,000. You've already maxed out your $6,000 for that year. So once you take out that $3,000, pay whatever you need, get some more money back, you can't go and reinvest that $3,000 back into your Roth IRA. You're going to need to wait until the next tax period opens up. So definitely make sure you're aware of all of that. Now let's say we have reached retirement age and we are living comfortably, not needing many distributions from our retirement account. This is another pro of a Roth IRA. With most retirement accounts out there, they require minimum distributions after the age of 72. That is not the case with the Roth IRA. So you can continue to allow your money to compound for as long as you need. This could be huge for how long your wealth basket could last in retirement. So with Roth IRAs, they are income limits, but let me start by saying anyone can utilize a Roth IRA. As you can see here on the screen, these are the 2022 income limits, whether you are single or married filing jointly. If you are single and have income that is above the modified adjusted gross income level of $144,000, you essentially cannot contribute to a Roth IRA the normal way or the traditional way. Same with married filing jointly couples. If you are above $214,000, you cannot contribute to a Roth IRA the regular way. And when I say regular way, that is a direct contribution from your bank to this Roth IRA account. These income limits change every year, and they're changing again here for 2023, so make sure you look up the latest income limits. All right, so this is great and all, Mark, but my income is too high, so what do? I'm so glad you asked. So let me introduce to you the Backdoor Roth IRA. You will need to open a traditional account, a traditional IRA account if you do not already have one. From there, you will need to make your contribution directly into your traditional account. So make from your bank or your regular taxable account into your traditional IRA account. From there, you will contribute or do a rollover, the backdoor option here, and you will contribute from your traditional IRA directly into your Roth IRA. So that's the additional step that you have to take in order to perform this backdoor option. Let me make a few comments first. So you are not contributing directly, you're contributing into the traditional, and the traditional is contributing to your Roth IRA. However, you can only do this process one time per calendar year. So make sure you have all of your contributions in before completing the backdoor process. Other things to consider are taxes. Wait a second, Mark, I thought you said the Roth IRA is tax-free. I did. It is, but when you complete this backdoor process, if you use any pre-tax dollars, or let's say you had money grow in that traditional account for a while as you were building up your contributions to get to that $6,000, you would be subject to taxes. So make sure you consult a financial professional before conducting any of this backdoor process. So that there completes our discussion on what a Roth IRA is. You can see the major tax advantages that it has for long-term investing. Growing tax-free, and it is all 100% yours at the end of the day, is amazing. And yes, there are income limits that cause an extra step, and the downside is you can really only invest $6,500. That right there tells you the power of these accounts. And because the government does not want you to be able to skip out on taxes too much. So now let's go through the process of opening up a Roth IRA account. And when it comes to where you want to open up a Roth IRA, if you have an account already at any of the major brokerages out there, think of the likes of Fidelity, Vanguard, E-Trade, Charles Schwab, M1 Finance. If you already have an account out there, most likely you want to keep all of your accounts in the same spot. So for me, I use Fidelity. So we're going to look through how you would open up a Roth IRA account using Fidelity. So if we go to fidelity.com, this is the site you're going to see. This is their homepage. And what you want to do is you first want to click on Open an Account. You should see this window pop up, which gives you various account options. But for us right now, we want to open up a Roth IRA. So we're going to click on Open Roth IRA. Now, if you are already a Fidelity customer, you can just simply log in using your login credentials as they already have your information. Now, if you're not a Fidelity customer, then you're going to have to enter the regular information, your name, address, the income limits that you have right now, just so they can track all of that from a tax standpoint as well. And then your standard agreements, your standard operating and trading agreements as well. So it just takes a couple of minutes to open up a new account at a new brokerage. So once you complete that, sign all of those documents electronically, then you've officially opened up your Roth IRA account. Next, you're going to get a window that's going to be asking to fund the account. And you don't have to fund the account right away, but there are a few options. You can fund it right now from your bank or even from your taxable brokerage account. You could also fund it from old retirement accounts. So there's rollovers you can do. Say you have a old 401k with an old employer. You can roll those into your Roth IRA. But if you don't want to contribute anything right now, you could simply just skip this window. And now you should be able to go back to your dashboard and see your Roth IRA account. If you funded any money right now, you will see that amount in there as well. So now I have an account open. What should I invest in? Well, when it comes to a Roth IRA, this is where you want money to compound over a long term. Typically, you want it to be hands-off. So you can look at things like an S&P 500 index fund or an S&P 500 ETF, something like VOO, which just simply tracks the S&P 500 index, the largest and best 500 companies here in the US. Another option could just be simply the total market index, which is VTI is a great option. That's the Vanguard Total Market Index ETF, which simply invests in every single US public company. So remember, like we talked about before, a Roth IRA is just a different type of account. It is a powerful account. You're going to contribute money into it, but remember, it's not an investment in itself. You need to invest that money. So don't just set up normal contributions going into the account. Make sure you have things setting up that they're going into specific investments so that you can compound over a long period of time tax-free. I hope you found this video helpful, and if you did, make sure you hit that like button down below, as that is huge for the growth of this channel moving forward. Also, subscribe to the channel so you'll be notified anytime we drop a new video. And with that being said, we'll see you in the next video. Take care.